Now I will cover the topic of properties. Now many people may know maybe 2-3 different ways of investing in properties, but what I've actually found from when I was writing, there are actually 17 different ways of investing in properties and becoming a millionaire. Okay, so what I'm going to do, I'm going to show you these 17 different ways today. So all you need to, it's good to know the 17 different ways, but all you need to do is just specialize in 2 or 3 investment strategies. And then what you do is you become an expert in this strategy. Alright? Okay, first strategy, very simple, okay? Okay, basically is what? Buy from developer and then sell it. And this strategy used to be very, very popular before 1997, before the Asian financial crisis. So at that time, what was the strategy? Okay, very simple. Any developer, doesn't matter. Any location, doesn't matter. When the time comes, what do? You join the queue, line up 2-3 days. And then when you line up 2 or 3 days, do you just buy 1 property? No, you book 3 units. Okay, because why? 2-3 years later, once the property is ready, you sell off 2 units. And the profit you make selling off the 2 units is enough to pay for your 3rd unit. So your 3rd unit becomes free. And that was a strategy many people did, and they made a lot of money. Okay, but let's say you happen to be one of the latecomers, okay? And then you know that developer who did Bukit Berundo? Yeah. And instead of buying 1 bungalow lot, you go and buy 3 bungalow lots. Where are you today? Probably still haven't recovered. Okay? So I'm not saying that this strategy doesn't work. It still does work, but this time you have to be much more careful. So this is what you need to do. You have to follow 4 things. First, you need to pick the right developer. Okay, the developer strength is very, very important. Number 2, you need to buy the right property type. Because nowadays, lifestyle is a major concern for many people. They want 2 car parks at least. Most condos only got 1 car park. Okay, they want security, they want swimming pool, they want the facilities, and they want new designs and things like that. Alright? Then you need to buy in the right location. Okay, and then the last factor is you need to buy at the right time or at the right price. So ideally speaking, don't buy when the economy is peak. Okay, don't go and book from developer when the economy peak, because why? 2-3 years later there could be a downturn or recession. What you should do is book from developer in times of recession or when you're coming out of recession. At least you know 2-3 years later things would have improved, prices would have gone. So timing again also very important. Okay? And then very easy, sell once it's ready, and usually you can easily get 20-30% higher, and then just keep repeating the formula. If you take developers like Sunrise or YTL, anytime they launch their product, let's say you've been with them for the last maybe 5-10 years, and anytime they launch their new development, you go and book, and then ready you sell. You think you'll be making money until today? You are. Okay, you wouldn't have gone very wrong with good developers. Okay, so let's look at some numbers. Okay, now let's say you buy an apartment for 500K. Okay, so 20% is your down payment, 100K, and you borrow from the bank 400K. Right? Okay, and say 3 years later you sell it once it's ready. Now let's assume you can get 600K. Now, could be more, could be less. 600 is just an educated guess. Now the loan of 400K you took, let's assume you let interest accumulate. Okay, so in 3 years your 400K loan is now ballooned to 435,000. So you sell at 600, that's off 435 your outstanding loan, so you actually put back 165. Okay, so you take 100K today, you put back 165K 3 years later. Okay, so you would have made something like about 18% return on a gross basis. So let's say we take into account legal fees and stamp duty and things like that. Let's say we divide it by 2. So say you made about 9-10%. Is it okay? It's okay, but nothing so exciting, right? Okay. So the way to make money using this strategy is this is what you must do. Alright? Firstly, you must know how to buy below developer price. Okay, so you must make sure you get some sort of discount. Whether it's a Boomi discount, whether it's a staff discount, or whether it's an early bird discount. Okay, because many times people who use this strategy, they actually tell me, after I sell off 2 years later, the profit that I make was the original discount I got. Okay? Because let's say you buy 100, you sell at say 150, everybody doing that, but if you bought at 90 and you also sell at 150, your profit is at 10k the discount you originally made. Okay? And what you should do is, besides getting a discount like this, make sure you don't just buy 1 unit, okay? At least go and tell 5 or 10 of your friends, and all of you negotiate and get a bulk buying discount as well. Okay, but again you have to be very careful. You say you go and tell 10 of your relatives and all 10 of you make money, is it okay?
Yes.
No problems, right? Okay? But all 10 of you suddenly the project, like in Bukit Berunung or something, suddenly go kaput. What's going to happen to these 10 relatives of yours? Well, they're still your relatives, but anytime you see them, you've got to hear something, right? Correct. And of course, relatives sometimes are the worst person. You cannot avoid them, right? Either at wedding or at funerals, right? At least spend some more with them. Okay, so again, you have to be very careful. But of course, if they are smart enough, they go in with their eyes open. If anything goes wrong, they shouldn't listen. Okay, so let's look at it. Say you get a 5% discount. Let's look at the numbers. Okay, now you're buying, instead of 500, you're buying at 475. And now your down payment is 75. Now your loan is still 400, okay? Okay, the reason is still 400 is this. You're signing the sales and purchase at 500. And then the developer give you that 25,000 discount after you sign SMP. So as far as the bank is concerned, you bought it at 500K. The discount is between you and the developer. The bank, even if they know, they'll pretend not to know. Okay? So everything else is the same. So let's look at your return now. Now you're getting about 30%. So divide by 2 is about 15%. This is where it gets a bit more. 48%. Divide by 2 is about 24-25%. Okay, though that's why I'm saying this strategy can still make money, but you must know how to buy below developer price. Very, very important. Okay? Alright, and this is how you structure your property portfolio. You always start at the bottom and then work your way up. Alright, so now we are going to be talking about the resale market, the secondary market, no more from developer. Okay, so second strategy is to buy in the secondary market and you're buying for rental returns. Now the best type of properties that will give you such good rental returns are usually low to medium cost apartments. You can easily get returns of about 7 to 9%, sometimes 10 to 12% also possible. Alright? The only setback here is your appreciation is very, very poor. They hardly ever go up. Okay? And properties like this, if you know creative financing techniques, you can even borrow 100% of your purchase price. And even after you borrow the maximum, okay, your rental is still greater than your bank loan. You can actually pocket about $100, $150 a month in your pocket. Okay, like one of my students, he actually specializes in Shala. And this guy owns, I think, about 30 to 50 units of properties, such properties in Shala. And he buys all with zero money down. Okay? And after zero money down, again, per apartment, he puts another $100, $150 a month into his pocket. Okay? So it can be done. Okay? Not that it can't be done. And for beginners, especially those who are just starting on property investments, never bought, this is a good way to start off. Okay? It won't go very wrong because it's low to medium cost. How low can it go? Okay, and the good thing is because the prices seldom fluctuate, any time is a good time to buy. You don't have to time your purchase. Okay? Whereas from developer, you know you need to time your purchase. And this is a very low risk investment. Okay, the only issue is tenant management is going to be challenging. Like the guy who buys at 30 to 50 units, how does he manage? Okay, the way he does it is very simple. Number one, he rents out always unfurnished. And then number two, he doesn't rent out to people. He rents out to the factories employing these people. Okay, so assuming he got 30 properties, so what he'll do, he'll divide 30 properties by maybe say 3 or 4 companies and then rent it out. Okay, so even if one company tomorrow decides to close shop, you say I still, not to say all my apartments become vacant at one time. Okay, so in a way he reduces his risk by doing that. Okay, so the idea is rent out unfurnished and then rent out to companies not to them. Because these companies will have workers from overseas, I mean from maybe outstation anyway. Okay, so they still have to provide accommodation. Now, where to buy such properties?